Morning, Chris. It's March. Where's February gone?
Indeed, where has February gone? My goodness, the year has started. Well, the thing is, the year has started well, hasn't it? I mean, thinking as not just individuals but as investors, the year has started well. But February was a bit of a tough month for many investors. Actually, not UK stock market investors; they did okay. But elsewhere in the world, it was trickier, particularly for bond investors, because of course central banks are starting to worry a bit again about inflation and interest rates and stuff like that. We saw the Bank of England, as we predicted last month, raise interest rates again. That was no surprise. But I guess the big debate is how much more do they need to keep on raising those interest rates? My guess would be we'll end spring in hopefully sometime around about May or something. And I think that's when they'll stop. But clearly, it's still a bit of a debate which is happening at the Bank of England and frankly, any other central bank we could mention in the world.
Yeah, absolutely. January was a great start to the year, and February has come as a bit of a shock for a lot of investors. And as you mentioned there, sticky inflation has been one of the main factors about this hawkish talk from central banks. What's fueling that sticky inflation at the moment then, Chris?
Well, I think it's the fact that if you think about life or the way that economies work, you've got sort of things which are kind of centered on factories or matters like that, things, and then things which we think about as consumer stuff. Now, the factories are learning to live with inflation, and also they've got better supplies, they've got lower oil prices and gas prices and related. That's kind of worked all right. But the consumer side, as we can see in our own day-to-day lives, whether we're paying for food or for some of the other bills that we need to make, unfortunately, some of those costs are still going up. And so I think it's a question of time, really, that the factory side, that it tends to sort of react the first and adjust itself first, and the consumer side takes a bit longer. And of course, there's the other complexity of the fact that things like labour markets, as we know, job hopes apparently are still strong out there. Certainly the unemployment rate is low, but that's also meant people are kind of, unsurprisingly, grumpy about the lack of wage increases and matters like that, whilst they're facing things such as higher food prices and related. So there's a few other kind of issues sort of working through. Do I still think, though, that underlying inflation is going down? The reality is, yes, it is. Will it, though, happen? Click your fingers and it happens immediately? Unfortunately not. But I think the reality is still, as we talked about really at the start of this year, the end of last year and related, reality is we will see lower inflation in 2023. It just takes a bit of time to happen. But when it does happen, a bit like how inflation kind of became an immediate problem for many people just over a year ago, it will also go away quickly too. And that's why I'm still sticking with my prediction that we're not that far away from the Bank of England stopping interest rate increases. And as a consequence, that will be an indication that they also feel that inflationary threats are starting to move away too. So many issues to think about, a bit political, a bit living, a bit just the way it is, easy comparisons and everything else. Is it something to be very, very worried about, despite the fact that we've no doubt got rising gas and electricity bills and higher mortgage costs and stuff like that? I know that's a big hassle and a big concern, but honestly, in the broader, wider economy, we've probably all seen worse, and reality is the world is still getting better. And that's still my good underlying positive about the backdrop, really, for investors or for us thinking about our day-to-day lives.
Yeah, well said, Chris. And I've got to touch on something now then. So you mentioned politics, and I don't think we've ever done one of these catch-ups when we're talking about investments and not touched on politics. Brexit, is it done? Is it over now?
Brexit, my goodness, it is what now? Technically, what is it, 6.5 years or so, something like that, when remember we had a sort of a discussion about that and the near 50% vote and all of those discussions. We've been discussing it now for over 6-7 years. Is it over? Reality is it the biggest issue in the world out there that we should be worrying about, even as UK investors and UK citizens? The answer is probably undoubtedly no. We have bigger things to concern ourselves about. Politically, are the government, and my guess is probably the range of political parties out there, are they thinking about the next steps? You bet they are, and they frankly have been doing that for the last few years. So Brexit, irrespective of how you voted or think about it, that's the reality. What matters even more is what you do with it. And hence discussions with Northern Ireland very recently, obviously, but actually even, I would say more importantly, other global economies out there in terms of how the UK can continue being an important nation for trade and related matters is still the key. So for me, is it something to worry about? Of course, business always is something to worry about. But is it the only thing to worry about? Absolutely not. We've moved well away from that. And frankly, it's just one of those things which we have to consider as investors, but also as business people or citizens about how the UK operates in the broader world. So am I very, very worried about it? Absolutely not. Do I still regard it as an issue? Yes. But frankly, there are probably 10 other issues we could talk about, be it geopolitics, be it inflation, be it an aging population, be it debt, be it the aforementioned interest rates and everything else, and related matters, which frankly we could talk about just as long about, and it'd be probably even more worthwhile to discuss.
Yeah. Do you see that geopolitics is probably the investors' major sort of hazard this year, and how things obviously can develop, not just Ukraine, but clearly the language between the US and China seems to be taking on a new level of, I don't want to say hostility, but certainly a new level of disconjoined thinking. Is that going to maybe be the biggest fear this year, do you think, beyond inflation?
Yes, indeed. I would say geopolitics always, I mean, for anybody of a certain age, they'll remember the Cold War and other matters such as that. And it's just that we're kind of moving back towards issues which were always very important in the 70s or 80s or related, which became slightly less important and now becoming slightly more important. They'll always be there in the background. Is it something to stop you doing things? You know, frankly, if we were very, very worried about a nuclear war, then I guess we wouldn't come out of the bunker ever, would we? And reality is, as an individual, you must always look forward, as I always say, with a bit of confidence. Geopolitics is important. Monitoring it, thinking about it, discussing it with people, absolutely. Is it the thing, though, that stops you being an investor globally? Absolutely not. Because I would come back to my thinking, certainly when we'd be discussing matters around COVID and issues with Russia and related. Ultimately, the world does get stronger and better, and people have that incentive not to do silly things such as wars or big trade disputes or related. There'll always be discussions, and that's quite correct. There should be, and ultimately, hopefully, decisions which occur because there's a relationship between countries or regions which makes sense for both of them. But should it stop you from investing or worrying excessively? Absolutely not. Call me an optimist, but my observation about the world over the last few generations is that is the way the world is. You know, there will be challenges, but there's also an incentive to try to improve them and sort them out. And frankly, when I think about other matters, be it debt, be it aging populations, be it climate change, be it all the range of other issues out there, we could have very worthy and interesting discussions about them as the most important factor going forward. And that is the reality. It's always a multifarious, complex world, but it doesn't stop you participating and living it. And you've got to keep on rolling. That's the key.
Yeah, absolutely. Just like the planet keeps on rolling, we got to keep on rolling. Thanks, Chris.
The world keeps on spinning, right? We're part of it. So that's the way always to think. So don't be too concerned. Don't be too worried. Keep on asking the tough questions. That's the important bit. As an investor, as somebody investing or whatever, ask the tough questions all the time, but never feel as if there's not an answer out there, because hopefully there is. And when there isn't an answer, that's when we've got to worry.
Yeah, well said. Well, Chris, thanks for the roundup for March. We're going to have a lot to talk about actually in April, aren't we? Because we've got the spring budget to digest. We'll have obviously what central banks are thinking. We'll have more data around inflation. So can be an interesting April, I'm sure.
Yeah, it is going to be an interesting April. You know, we move into kind of that deeper spring period, excitements towards all the opportunities out there. The budget's going to be fascinating whenever it is in it. So lots to discuss, but as always, enjoy hopefully the slowly warmer weather and longer days, and we'll go from there.
Brilliant. Cheers, Chris.
No problem.